Hello, probable traders. This is Scott from probabletrades.com, and this is your update for August 10th, 2017. And before I get to the chart, I want to talk about the trades we took today. Our exits, we exited 3 of these longs that were taken earlier in the month, and those all worked out pretty well. And then we got in short Union Pacific, and we got long this ETF, the India Index Fund. So we'll see how that goes. I already know, to spoil the party, that on Union Pacific, I already have a signal to exit tomorrow. So one day wonder on that one, as being short was good today. So not to spoil that one, but those are the trades we took today. Let's do a market overview. Kind of very interesting day today. We had this big down day right here. Let me just zoom in here. And after very little volatility, we of course had this big down day, and one of the biggest days we've had in a while. So the VIX spiked almost 50% or so, and really no fundamental reason other than everyone's just been waiting for a pullback and calling for a pullback. And obviously there's the North Korea stuff going on, and a lot of for those that are subscribers or doing the free trial, you'll see there's a lot of signals on emerging market ETFs and overseas ETFs. So it must have roiled the overseas markets as well. It reminds me of last August. We had a big move like this. Let's see where it was last August. It was actually September. We had this big move right here. And this, I believe, was when China, there was some currency issue with China. I can't remember the exact issue, but it spooked the market. And so for those that are members or doing the free trial, you'll see in the entry signals tonight, you'll see lots and lots of signals. When you get big days like this that surprise people, you're going to get a lot of new signals. So I actually did some studies, and I did the study a while ago, and I couldn't find any data to update it for now. I couldn't find the queries of the work I did. But basically, when you get a day like today where you get lots and lots of entry signals, those are actually very good days to take those signals. In other words, when you get lots of pullbacks, and if you think about it, it makes sense, right? If you have lots of stocks, everyone's just getting pounded, and it's a broad-based sell-off. It's most likely an overreaction. Everyone's just panicking. Everyone's running for the gates. Everyone's selling first and asking questions later, and some good quality stocks can get oversold. So the research I did, I don't have the exact numbers in front of me. You have to rerun the research. But basically, anytime you get a day where there's, I can't remember, at least 50 signals or more. I can't remember the exact numbers, but those are very probable, high probability trades to take when the market sell-off is so broad. And you could look at something like maybe the advanced decline line, or other sort of market internals. But that'd be something interesting for future study. We want to compare days like this and the more overall market internals when they make big changes like that. How well the signals do. But I'll try to rerun that research sometime and do a video on it. But basically, that was encouraging to me to see that, and it's kind of scary. When today was scary. I mean, if you were to go out and say, hey, I'm going to go buy a bunch of stuff tomorrow, it's scary. And everyone always says, oh, I'm waiting for a pullback to buy. I'm waiting for the pullback to buy. And then when the pullback comes, they don't buy because they're scared. And then they miss out. And someday the pullback will be more than a pullback. It'll be a downtrend, the beginning of a downtrend. And that's the fear, right? We don't want to be buying into a new downtrend. But so that's the challenge with this stuff. You have to know when there's blood in the streets. You have to know when people are panicking or overreacting, and you have to react accordingly, and just kind of close your eyes, plug your nose, buy, and hope it works out. Now, I'm not telling you you should go buy stuff tomorrow. I'm not a financial advisor. I don't want you to do something because you told me you think I told you to do it. But the data shows that more often than not, broad sell-off days like this are good buying opportunities, and the pullback signals that we publish are more successful than normal. And that was also kind of contrary to our research of the almanac this month. If you remember, we talked about this earlier, that in August we don't want to do any PB longs or LP longs except for ETFs. LP longs are bullish or okay. But there's some interesting other interesting statistics I saw. One is that, let's put this back to 10 years. One is that, so signals in August, and I've got this set to 200 million in liquidity, and I'll tell you why I'm raising it. But basically, as you know, just going long in August, not that great. But long on Thursdays, any time of the year, is good. And then long Thursdays in August is good. Now, there's only 20 trades, so this is not a raging, high probability, statistically significant probability. But I thought that interesting that for some reason on Thursdays, the day before the last day, when you're buying on the Friday and you get a buy signal, those tend to work out better than on other days. So the three things combined being lots of signals. Tomorrow's today that's a Thursday, so the signals today are coming out on Thursday, and that's it basically. Those two things are the reasons I'm going to be doing some buying tomorrow. And so what you do when you get lots of signals, like you'll see in the entries page, when you get lots of signals like that, you have the question, well, I can't buy all these. I don't have that much money. I can't buy every single one of these. So what I do is this. I focus solely on the LPs, because those are higher quality signals, but they don't happen as often. But when you get a lot of them, it's time to shop, to take advantage. So I'm going to focus on the LP signals tomorrow, and also especially the ETFs. Now you'll notice a lot of the ETFs are highly correlated. There's like 3 or 4 ETFs just about China. And so you don't want to load up on all of those, because you'll have a quadruple size position buying China. So maybe buy one ETF on China, there's an ETF for just kind of overall emerging markets. There's another one for Brazil. So you don't want to load up too much on things that are the same or mostly the same. So you want to be aware of correlation risk. But the other thing I do when I get lots of signals is I look at what liquidity. And what that does is it limits, if I'm at 50 million liquidity on the entries, I may get 50 signals. If I go to 100 or 200, it narrows it down to maybe 20 signals. And higher liquidity, always instruments that are more liquid mean revert better. So in our studies, so I'm going to focus on the bigger cap ones with more liquidity, and I'm also on the LPs. I'm going to look for 2 of those, at least. I'm going to look for the win rate to be blue or cyan, and also the profit factor to be blue or cyan. The number of trades usually aren't cyan, because we don't get 20. A lot of times we don't have 20 trades, just because, again, the LP system doesn't trade as frequently, so we don't meet the 20 trade criteria. But so those are some ways you can limit or filter out amongst all the signals you're getting. Look for the higher liquidity, that filters it out, and then look for at least 2 of the boxes are blue. And that's all I have for tonight. So good luck tomorrow, and we'll see how it goes, and happy trading.